Welcome to the commodity section, and here we're looking at gold. Now I'm a little bit confused about the wave count, so I'm a little bit unsure about the situation. But what we do know is that we can see that we've had a strong trend here, and we can see that it's starting to creep through here. If we'd got a new high here above this high here, then that would have put this pattern here in positive light and we would be seeing more upside, but that's not the case. It's under this level here, so it's quite possible that that we can see more downside in terms of down for 1, back for 2, down for 3, 4, 5. It's also can be an A wave, a B wave, and a C wave here, just covering this gap here nicely, and then working higher from here. So you'd want to be seeing nice support above the 40 or the 45, so to speak, up through here. So there are signs of weakness in the market here, coming back from this point of view here, from this high here, this high here being lower than this one through here. So we just need to tread a little bit carefully through here as well. I mean, obviously the main trend is still up. I've just labeled this as an ABC here as such, but because this could be wave 5 to here, but to me this is just a bit small for wave 5. And in fact this is a little bit small for wave 4. So but we are seeing some type of slowdown in the trend coming up through here. So that's the obvious point here, so we just need to be a bit mindful of what's occurring. I'll just see if I can drill in here a little bit further and see what we can see in this wave count through to here. So what we can see, this would be, let me just squash this up through here, because we're counting these 5 up here. So let me just have a look here, a bit of a work on the run. So obviously that's part of that there. Just get that out of the way. It doesn't really count as 5 waves from the high down to this point here. It counts like 3 waves here. Okay, so it does appear to be like an A and a B and a C wave here. So it could certainly build from this point here. Just have a look at this a bit further here. Yes, so it doesn't really leave us that much better off, actually. But look, a move back, well, 1335 as a retested resistance would put the first bearish bias in play here, and you'd be looking to short and under this particular level through here. The copper market here is weak, and that also sort of puts gold on that note as well. And I do need to say that, yes, look, we are expecting a new low below here in terms of this being an A and a B and a C for wave 4 here, and looking for 5-wave structure to the downside here that can go below the 300 here. We follow the COMEX, the copper, the US copper, basically, because it's the last closing price. But the English market is obviously does more volume, and it is bearish here, and we've always been aware of this. We were looking at this being a corrective pattern here, but it's holding up reasonably well as such. But you can see that we've got little 5 waves down through here, and technically we would eventually see a low below here as well. In my sort of humble opinion, while it's below the 72 here, then it's weak. If it finds support above that, then it's strong. And we use copper mainly because it's used in everything, and well, most things, a lot of things, and it gives us quite a sort of central ground to things. But when we look at nickel, for instance, here we can see that it's been trending up quite nicely on a bounce here as such, and the zinc as well. That it's pushing up as well. And as I mentioned in the I'll just go over this here because I brought this up into the indices section as well. This is the UBS commodity index, which is owned by the Standard & Poor's, the S&P company, but it's a basket of all the commodities in here. They've all got some have got more weighting than others, but they're normally all under. The biggest ones will be under I think biggest one's actually gold. But there's crude in there and wheat and corn and the whole basket of them. But none of them kind of dominates because they do it on liquidity and volume and transactions and whatever model that they use. But it's kind of an even base. But the main point here is that this move down through here, and I won't go into detail, but it is a 5-3-5 structure. So 5 waves, 3 waves, and 5 waves. And we actually did, point out this is a possible low right here. And then we got 5 waves up here, and then we got the retracement. Because we got 5 here, it means we'll get 5 over here. And you can see now that in the commodity section, we are getting a nice 5-wave structure. Well, we've got these little 5 here, so when you would get a 5 over here, but this one here is really pushing up quite strongly here, and still not completed yet as a 5-wave structure. It's really got ourselves the 3rd wave here. So beyond that, we would also get this structure here, as such, being up here, would also be larger as well. There'll be a larger 5 waves unfolding on top of that as well. So this 5 waves coming up through here that's still unfolding is just the 3rd wave. There would be a 4th wave and a 5th wave to follow that. So the commodities generally are quite strong, and yes, those grains are pushing it up quite nicely, and be other commodities too that we don't follow, but I'm sure many of them are positive as well. But copper is weak, but it seems to be a bit of an isolated case. So I guess that's what I'm sort of pointing out as such. Well, not so isolated. The oil market here, we've got this wave 5 in play here, and we've had this first move down through here to 100, major trading level 1 here, and we're looking at the bounce. So we're looking at an ABC bounce here, that the norm will be the 50-60% retracement level. So it's kind of in that ballpark there already. So then we were looking for failures to short. So the 102 as a retested resistance, or any weakness that you see, that comes up through here. If it does move up here higher, then it's this block here at just at 103 here that would be the supply resistance at that point there. Just be mindful that this is sort of turning there. This is also the same for the Brent as well. The Brent could go up further though in terms of its retracement level as such, because we'll be looking up as a retest of all the ones there as such. It hasn't moved up so far, but it's got the ability, it's got the space to do that. That's what I'm saying there. So Western Texas instrument can go up higher as well from there, but because we got 5 waves down through here, we're looking at a counter trend and then further downside for oil. The gas market can also move down as well. We're looking, it's going back, we've been looking at this whole move coming up to trading level 5 here, and we're looking for a corrective move back, and we're just naturally looking for a 3-wave swing. Now, obviously this little block in here is getting a little bit complicated. Its best fit so far is a triangle. A triangle is a 5-wave structure that was labeled A, B, C, D, and E, and normally occurs in wave 4 or in B waves, and we are looking at a B wave here. So we could see this move lower, and it's quite logical for it to do that as well. But obviously it needs to break support here at 450. We're not really interested in this market just yet. We want this A, B, and C to mature enough so we know what it is, and then we will look to trade the next trend from the end of that correction. The soybean market is doing all the right things, and our target up here is the 1500 here. I've been long here for quite some time, and we'll continue with that. I thought there may have been a larger correction, a larger ABC at the 1400. It's not the case, and this is going to climb higher. And in terms of climbing higher, this would be wave 1 and wave 2 in here. This would be wave 1, 2, 3, 4, and 5 for the 3rd wave, the 4th wave, and the 5th wave to come in through here. So a 5-wave structure to this point here. There will be a correction across here, and we will be going higher as well. So let's just see how we go this week. If you want to lock in some profits at the 1500, then fine. But I would imagine that we're going higher. And I'd also need to relook at this wave count here and basically rework it so it's got a better look and feel and perspective about it. But I think I've done all the right things. If we're going to be extending further up, though, then this wave 1 would have to go to this area here on top of wave 3 and wave 2 into here and wave 3 to here and 4 and so on. But we'll relook at all of that. I need to go to the actual market and have a look at the volumes and see what volume confirms price action and so forth. But as it stands, we're on track to go higher. So intraday terms, that the 1450 is a retested support. It's had a few swings through there. It's not like it's got support yet, but it is sticking to it. So it may just come back down and check it before it moves up. But there will be a resistance in group 2 here. Once we've got support on 1472, then we'll be up at the 1500 there. But this doesn't have to check back in here, by the way. It can just go straight up through here. It's got that momentum to do that. The wheat market here, I would need to rework this wave count as well, but it's all pretty good in terms of continuing to the upside. That's the main point, and holding long in this. So I can see that, and as I mentioned before, we can see this. This has got 5 waves to here and back again, and then we're looking at. I just better move that so I could see exactly what we've got in here. This may be a 1, 2, 3, 4, 5 to here. So, but still, it's unfinished. It's unfinished in terms of we've got 1, 2, and if we've got the third here, 4. It's still unfinished here. So we can still get a larger correction across here before we see any upside here across the medium level here, 650. But anyway, we're going to keep on adding using the robo method, and you can also just add on the 650 after it's matured somewhat. And we'll be heading up. But I guess the good news for this too is the 650 is the halfway point, and we'll be looking up at 800 here for this. There's obviously resistance along the way here, and they would be 700 will kick a bit of a fuss, but 720 more. 750, 780, all the levels, but getting a nice solid support on 650 here, so a nice big ugly correction would be really good here, because it would be a foundation for the next trend up. But we are going to keep our stops out of the way here, because we want support here and we want to be adding on that 650 when the time's right. The corn market, well, it's pretty self-explanatory. We've got 5 waves up to the 500 here. It could possibly pull back to the 50-60% retracement level here before we see further upside here. It may not be the case. We may only come into this sort of area through here and get something like this here, again here, before we see move up. We're going to get some type of pattern across this level here. So it's going to be time consuming and whatnot, but if you're long and you've been holding contracts, then, well, you may as well continue to hold. But depending on the overnight financing, of course, because that's going to chew into it. But otherwise, take the money at 5 and we'll look to get back in. But once you're in, it's easier to stay in if the position sizing is small. If you're sweating it out a little bit, well, then perhaps sell, a third or 50% or, 70%, whatever suits you. But from my perspective is that we now have 5 waves up. We will get some type of correction across here. It could pull back to the 450, but once done, we'll be looking further to the upside. And any positions gleaned under the 500 will become very valuable once we've got support here, because they won't be touched again. The orange juice market, just on the intraday here. We don't need to go into the bigger picture as such. This we've got here up for 1, back for 2. So we're in the third wave going up here, and in the third wave here we're looking for 5 waves. We're looking at this as 1 and 2 and 3, and we're looking at 4 last time we spoke, and that's come into play now. So we should see wave 5 move up. As I mentioned, the 158 will give us some resistance, and so will the 160, and so will the 162. 162, as I pointed out before, is a bit like, well, the 62 is like 61.8, and 162 is what you use for extension. So that will be there'll be trouble here, but not a lot. It will only be a wave 4 of this degree here. This is wave 2 here, so it will be like that, but probably a bit more complicated, because if wave 2 is simple, then wave 4 will be complex. And wave 4 could pull back to the wave 4 of 1 lesser degree, so it can pull back into the 152 from the 160 high area through here. Once again, it's kind of good if the 150 here, the medium level, can be tested. The more this is tested, then we can bring all our stops up to that point. But until that's been retested and confirmed as support and the market's moving off, we have to leave our stops under here. Right, that's it. Okay, thanks for listening.